Okay, good day, everyone, and welcome to another of our session. In today's session, we're going to be it's basically around the Anzu strategy class, and this particular series is all about helping traders to become better, more profitable, and more confident with regards to trading. I'm going to be your host. My name is Nana Obina Alexander. I'm the senior markets analyst, the head educator, and assistant country director for Anzu Capital. So yeah, I'll be your host for this particular training and many of the trainings you join with Anzo. Okay. You can follow me up on Instagram at fx underscore JEDI, and that's how you reach out to me. Okay. Now let's quickly enough with the intro. Let's jump over straight to what we will be looking at for today and what we'll be discussing. Today's session we would be looking at an entry schematic. So I thought hard and long about what I was going to discuss with you guys today. And, some of you might have joined a number of my classes. Some of you, this might be the first time you're joining classes, which is all good. But I'm hoping that you'd enjoy the classes, like most people do. Okay. And, for those of you who join my classes, you know that one of the things I always hint and with regards to trading is the fact that you should have a detailed plan as to what you're looking for and how you plan to execute those trades. So if you want to be a buyer in the market, you should have a reason as to why you're looking to buy. And then you want to, if you want to have entry criteria as to what you need to see or what you look for to get involved, either buying or selling, depending on what direction you want to trade, and then how you exit the market. So first of all is you want to understand market structure, where you think the market is going. The second one would be, okay, how do you enter the trade? What do you look for to get into the entry to get into a trade after you've decided that you want to maybe be a buyer in the market or maybe be a seller? And then once you've entered into the trade, you want to now decide how do you manage your positions. So you're playing two games. The first one is the trading game. This is where your direction and entry comes into play. And then the second one is your management, how you manage the trade you're currently on. Okay. But in today's class, we're going to be looking at entry criteria, using the counter trend line, and lower time frame structure as entry. Okay. Now, for those of you who are brand new, who are new to trading, don't worry, we have you covered. So one of the things you would benefit from with using Anzo Capital is the fact that we plan for every particular aspect of our clients, and we want you to be the best. Okay. So we have several courses, both for beginners to intermediates to advanced. So as you can see on my screen, and these courses, they're all free. That means you don't have to pay for them. Right. However, you need to have a funded account with Anzo to be able to take advantage of them. So, for instance, this is the basically the beginner crash course. You can see, and all of these have videos. So they have between 5 to 30 minutes video, obviously depending on explaining every single concept from the introduction section, from the introductory section, introduction to the forex markets, right? Then you go over to every single section, why trade the forex markets, market understanding, market structure. So for most of you, you already have a strong understanding of this, but there are still some very core levels here. Now you go to the next level, so you have basically the advanced section, where you now have classes that's like how to creating a profitable trading plan, understanding market structure, Fibonacci application to market structure, understanding trading divergence, Elliott wave trading. So all of this now, each of these have basically an explanatory video, a detailed explanatory video to them, that can help you grasp the concepts to the full. So it's a full on its own. With this, you can just take it as a self-paced course and become a master, if you follow through on what you're learning. And then for those of you who are AI based advanced traders, then what you want to do, we also have a class for you. So this section is on how to build forex robots, right? So this class is basically teaching you. My goal in this particular class is about teaching you how to build forex robots for your own strategy. So you see, like, it doesn't matter where you are or how advanced you are. There's always something you can learn to take your trading to the next level. And the good thing about this particular robots class now is the fact that, well, So you can see it's still the same manner. Each of them have videos that you'll be able to follow through on. But for every single bot that I build during the class, you'd have access to it. You can download it and you can backtest it for yourself. So wonderful. And you are not paying for any of this. It's free. All you just need to do is have an account with Anzo, fund your account. Now, most of you, quick one. I hope everybody here, is there anybody here who doesn't have an account with Anzo yet? If you don't, just type in yes. Okay, if you don't have an account, just type in no, and if you have an account to answer, just type in yes. So I'll have a feel for that, and then maybe toward the end of the class, I'll probably drop a way to reach out to me to set up an account for yourself. Okay, so now let's jump straight into what we have to discuss for today. Okay, so I see some no's and some yes. Okay, don't worry, we'll get back to you. Okay. Now remember, while we're going on the class, feel free to drop in your questions using the chat box. Okay, and then I will get back to you probably toward the end of the class to try and answer your questions. So that because it's recorded, so that it doesn't go up and down, so we can be basically streamlined. Okay. So just like I discussed, we're going to be looking at using counter trend line as a reason to, as basically as an entry criteria. Now, I have a detailed training with regards to market structure. So I'm not going to go over a lot of things. So one of the things I always tell my client or my students is the fact that one of the most important aspects of trading is determining the direction you want to trade towards. So for instance, if you feel the market is bullish, so for those of you who know me, you know that I'm a trend trader. Basically, I look to trade in the direction of the market. I don't like to counter trend trade, okay? Because think about it, for instance, this market is bullish, right? Trying to sell this market means you're trying to maybe catch this move, but then what will happen is most likely this continues. So instead of trying to swim against the current, I like to swim in the direction of the trend. So this is what I mean by trading the direction of the market, okay? So that means for me, understanding market direction is key, right? Understanding the direction I anticipate that price wants to head towards is important, is of utmost importance if I'm going to be successful as a trader. So once you determine that, okay, I feel this market is bullish, I want to be a buyer. Now, just because the market is bullish doesn't mean that I can't change bearish. So this is where experience comes into place, where you now have to understand how a market, what you look for to see that the structure of the market has changed and you're going from being bullish to being bearish or from being bearish to being bullish. But let's assume that we are bullish in the markets. That means we're looking for buying opportunity. Just because we're looking for buying or we're bullish and the market is bullish doesn't mean that anywhere you buy is a good place to buy. So for instance, let's say price is making higher highs, higher lows, higher highs, higher lows. This current place doesn't really make so much sense to be a buyer in, especially if you're trying to swing this. So for instance, trying to buy here. Now, the chances are if you buy here, price is most likely going to get here. Okay. However, for you to be wrong about this trend, it means if price close below here, then that's where it negates this whole move. So it doesn't really make so much sense to try and be buying this market from here, except let's say you have a lower time frame confirmation to enter. But just simply using this time frame doesn't really make sense to try and buy here to go after here. Okay, so just because the market is bullish and we're looking to buy doesn't mean everywhere is a good buying opportunity. Okay. Somebody says they can't hear anything. Please, other people confirm that you can hear me. Can you guys hear me? Okay. So now, once we've understood the direction that we want to trade towards, okay? Once we've determined the direction that we want, okay, thanks. So that means, what is your name? Techno, who sent that message? Yeah. You should probably check your audio, okay? Now, so once we've determined the direction we want to trade towards, that means the market is bullish, we want to be a buyer in the market. Then the next important point is you ask yourself, how do I get involved in the buying in a buy or a sell, depending on what direction you're looking to trade? And then you ask, where do I get involved in that trade? Now, for some of you, you might use something like Fibonacci retracement, and let's say the 50% or the 61.8. Other people might use something like imbalance and other block, people who are trading the SMC, and people might even use other, other things, right? Now, any of these systems, they are all good. You can be profitable trading anyone. And just, the system I'm trying to teach you doesn't necessarily mean that's exactly how I trade. But one of the reasons I like to teach people different things is because what works, the style of trading, somebody might be comfortable trading a 1-minute chart because they have time to look at the charts all day and trade SMCs and imbalances from any single region. And some other person might might only be able to have few times or few hours of the day to look at the chart. So the strategy that will work for one person might not necessarily work for another, right? Which is why it's important. Like in one of the last classes, I taught you guys divergence and how to spot divergence. We also use it to capture a big move in GBP USD and also Euro USD. Okay, now that style of trading might work for some persons, might not work for others, but you want to take the concepts, then you want to apply it for yourself, especially back testing it and see how that would have played out and if you're comfortable with the system. So today we're going to be looking at counter trend lines as a confirmation technique. Okay, now we all know what trend line is. So let's say market is bullish, making higher highs, higher lows, higher highs, higher lows. We draw the trend line as so, right? So something like this, right? So this would be the trend line. Let's say the wick gets here, stuff like that. Now this would be, this line down here would be the trend line. That's how we draw the trend line in a bullish market. Now, if the market is bearish, obviously the trend line would be in the opposite direction where we're looking at something like this, and the trend line would be along the top like this. Right. Now, what is counter trend line? Now, if your market is bullish, that means the predominant trend is for price to continue to go up. The counter trend are these moves here. Okay, so these bearish moves here, they are the counter trend. So basically, when we see a bullish market, we've identified that we want to be a buyer in this market. Okay. Now, on the bullish market, we know that price is not just going to be moving up in a straight line forever. It's going to keep pulling back. So within this bullish market, there is a counter trend. There's a counter trend move where the market begin to go bearish, which are these areas like this. Now, when the market begins to go bearish, right, that's so freaking bad. That in itself, sorry about that. When the market begins to go bearish in a bullish market, that move is against the overall trend, which makes it a counter trend. Now, we do the same thing. We now look for a trend line in that direction against the market, right? Now, the reason we look to do that is because we want to find we want to see the market continue in the direction or the overall direction that we're anticipating in the first place. Don't worry, when we go over to the chart, I'll show you some examples of that. Now, one very important point to note is when looking to identify market structure, we want to do that on the higher time frame. Okay, so the higher time frame might be the daily charts. If you're looking to trade, get involved in 15 minutes or 5 minutes or stuff like that. It could be the weekly charts, it could be the 4-hour charts, right? But at least let's say the 4 hours, so the weekly time frame. You're using that as your higher time frame. So you identify the trend on that higher time frame, and then on the lower time frame, you look for the counter trend line break. Okay, so basically, let's say this chart now, what we're looking here now is a daily chart. Okay, so price is moving bullish on a daily chart. Now this move here, so let me change the color of this pen. So this move here, right, this move that is dropping down here, if this is a daily market, on a, let's say 1 hour or a 15-minute chart, this area highlighted will look something like this, where price is bearish. So this would be the same as this, right? So on the daily time frame, was still very bullish. Price market is still bullish, it's just retracing, okay? But on a smaller time frame, we'll probably see something like this, okay, where the market is moving in, it looks like the trend has changed, right? Now, this area is what we want to highlight and then look to draw the counter trend line if we can spot one, right? Now, trend line can be very tricky because, the market might not form a clear trend line, okay? However, I'm going to show you how to associate the concept of trend line with structural shifts on that lower time frame to use it to form entry confirmation. Now, remember, we're going to make, the idea is not that we're going to win all our trades, but we want to find a way to reduce bad trades, right? And then increase the possibility of good trades. That's the whole idea of what we're looking to do. Now let's use, what I'm trying to look for what's payout use. So let's just use gold, for instance. So let's use XAU UST. Now this concept will work on any instruments, any instruments, whether it's forex, futures, indices, commodities, it doesn't matter. You'd be able to apply the same concept across board. You just want to identify the overall direction in the trend, look for the counter trend move, wait for the counter trend line to be broken, and then look for how to get involved in the trade. And most importantly, look to manage your risk. Okay. Now, there are many of you, many traders, and I'm sure many of you here who don't like to trade with stop loss. Okay, because you believe that anytime you put stop loss, the market, tends to take you out and then go your way. And so for that reason, you don't put stop loss. Well, risk management is one of the holy grail to trading. So as one of my courses that you'll be able to participate in is the importance of risk management and trade psychology. So you can always go over that at a later time. Okay. So let's just go over to let's just use another pair. Okay. XAU UST. I just wanted to use a fresh chart because on this my current chart I have some annotations. You don't know why it's taking so long. Anyway, let's look at the daily time frame here. Okay. Now I have some annotations here. That's why I wanted to use a different chart. So okay, let's just use a random pair, a pair that I've not traded for, I've not looked at for a while. Let's see CHF. Do I have anything here? Okay, no, I don't. Okay, so good. Now on the daily time frame, you don't need the soothsayer to show you that this market is bearish, right? So this is a bearish market. It's clear the market is moving downward. And we know that because, well, price is doing what's making lower lows, right? So if I go back a little bit, we've made lower lows, lower highs, lower lows, lower highs. So we're making lower lows and lower highs on the main leg. And then in intermediary structure, we're also making lower lows, lower highs, lower lows, lower highs. So the market is bearish, and we can see that because price is resultantly going down. Okay, so I'm just going to try and keep this simple. I'm just going to try and keep this as simple as possible so that everyone who is annotating on my chats, okay, so I'm just going to try and keep this as simple as possible without having to go in depth into market structure. If you want to understand market structure better, I have a video on that would also help you with that. But let's just take this area for as a case study. So this area here, right? And this is a daily chart, and this is what let me see how far back this was. So this is January 2023. So at the beginning of the year is where the market was, and resultantly price has been going down. So you don't need to look too hard to see that the direction of this market has been making lower lows, lower highs, lower lows, lower highs, lower lows. You get the idea, making lower lows and lower highs all through. Now, it wouldn't look exactly the same, but you can see the concept. Now, ask yourself, at this particular point, now, I've not even looked at this market for a while, but what do you think I'll be expecting now in this market? Is it for price to continue to go up? But the answer is no. I'm probably expecting price to come down and make a new lower low. Okay. And so with this understanding, I would probably want to look for selling opportunities in this market. So this is a perfect example of something that would be able to spot previous price action, and then we can look for potential on how we can trade current price action. Okay. So now well, I'm just going to try and zoom in so you can see this a little bit more and just see if I can label, just highlight some areas here. Okay, so this is the high that there, and this is the low. So at this time, let's say we're still looking at this market as being bullish based on this other side. So price made a new lower high, and then makes a new lower low, and then makes a new lower high, and comes down and makes a new lower low. Okay, so basically, So basically, so somebody asks, what's the best time frame when analyzing the market trend? Well, usually you want to do this on a slightly higher time frame, so like the daily, the 4-hour, or the weekly, preferably the daily or the weekly, just to spot the overall direction, and then you can now begin to come down in your analysis. So you see the market is bullish on the daily, making higher highs and higher lows, and then let's say on the 1 hour, you're looking for confirmation of that bullishness. And then on the 15 minutes where you enter, you're looking for confirmation of that bullishness. Okay, so I don't worry, I'll try and show you examples to that regard. Now, so let's take this leg, for instance, where price made a, came from. So we've established, at this point, we've established the fact that price is making lower highs, right? And what? Lower lows, okay? So let's say we see price, we're looking at price at the live price market, at the live market, and this is where price is, somewhere like this. Let me get this, right? So we look at this and we see, we look at this and what we see is that, yes, the market is overall, so we see the market has been bearish. Now we're shifting back bearish, okay? And yes, if you look at the most recent price action, it looks very bullish. So price were making higher high, not necessarily not making higher highs, but just making bullish candles. Okay. Now this is where a lot of people get it wrong, and then they start to say, oh, this market now it wants to begin to go up and up and up and up, not understanding that the overall momentum of the market is to continue to go down. So it's at this point that we want to now look at the market and say, this is a counter trend, meaning on some lower time frame, this move here, right, would look like this, right? And so what we want to watch for is a break of this lower time frame trend to confirm with the overall higher time frame trend. So on the lower time frame, the market was bearish, is now bullish, even though the overall higher time frame is bearish. So what we want to see is wait for the lower time frame to break back bearish. And then if possible, see that break a trend line. Okay, so this will be a counter trend line, because remember, the overall trend is bearish, but this is a counter trend. Okay, so let's highlight this area, and then let's go down to a lower time frame. Okay, so I'm just going to exit the replay too, and we are good. Where's that area here? So that's it here. So this is our low to the high. Okay, now, okay, you know what, let me just draw a rectangle around it. Okay, so this is much better. Who is doing that? Please kindly do not do that. Okay. Okay, so now we're going to, so this is, so I hope everybody's following me. I hope you guys, you're following exactly what I'm saying with regards to this particular move. You know why I have this area highlighted. So we're basically looking at previous price action to try and understand the concept of counter trend line move. Okay. So price is making lower lows, lower highs on the higher time frame. And then we're now want to now look for an opportunity to enter, because you don't want to randomly be entering position. So yes, you know that this market is bearish, and so as the price gets here, you sell. You probably take a loss. Again, you sell, and then you probably take a loss. But so we don't want to be selling randomly or buying randomly. We want to try and have some sort of confirmation. So this is basically where the confirmation or the entry criteria section comes in. So we'll want to use counter trend line as a confirmation as to our entry, whether we want to whether it makes sense to be a buyer or a seller, depending on the direction we're looking to trade. Okay. Now, so what we're going to do is I'm going to go, so this is daily chart. I'll just go down to the 1 hour chart and we'll look at this area. So remember, note that on the daily time frame, this doesn't look bullish. It just looks like a pullback. Okay. Now, so I'm going to go to the 1 hour charts. Okay. And let's drop down to the 1 hour chart and let's find that area. So I'm just going to push back. Where are you? Okay, so that's it here. Okay, so this is the area where we saw. So this was the low. Okay, and what you can see here now is what is it doing? It's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we can see that trend on the lower time frame forming. Okay, and this trend on the lower time frame is what? It's bullish, even though the overall trend on the higher time frame is bearish. And this is the reason why we call it counter trend, because this mini trend here is anti or counter the overall trend. So what we want to do when we spot something like this is we now say, okay, well, what we'll do now is we're going to, now you don't necessarily need to use trend lines, but you could just, a good understanding of market structure would help. But we can just, at first you might say, okay, this is a trend line. Is this a trend line? This is where trend line can be a little bit confusing. Okay. But just take the cleanest trend line you can see. Okay. And it will be something like this. Okay. Now you notice what's going on here. Yeah, price came from a low. Okay. It made a high, made a higher low, made a higher high, made a higher low, made a higher high, and a new higher low. So at this point, we see our trend line forming. So you can see that the market is holding this trend line. Okay, so we have spots, basically identified trend line, which is against the overall direction. Now, what do you think we'll be doing during this period? What do you think we'll be doing? So let's say, remember, when we see the market make this, so when price makes this, okay, let me do this like this. So when the market does something like this, where we see our trend line forming like this, and we draw our trend line, what do you think we'll be doing? What do you think I'll be doing as price is continuing to make its move higher and higher at this point? Would I be buying or selling? Well, I'll be doing nothing, right? All I'm waiting for is for price to break this trend line, right? That's the first sign I'm looking for. I want to see price break the trend line. And then the next point will be, I want to see the structure, a structural shift. I'll show you what I mean by structural shifts, okay? So we're just waiting. Price comes to the trend line. Does it break it? Well, no, it doesn't break it. It continues to push up. So this is even good. We're still seeing that price is holding this leg. It's holding the trend line has effect. And then we just continue to wait. We're just waiting for what? For the break. Now, at this point here, so let me zoom in a little bit. At this point here, that's where we have the break of the trend line. Now, this is where it becomes, personal preference comes into play. Okay, so some people might say, okay, I want to see the break of the trend line, and then I look to, you cannot use, let's say, break and retest and use that as a reason to sell. So you break below, retest, and then you sell. Another thing you can do just to, look for, to make the confirmation clear, is you want to see price break structure. Now, I'll tell you the advantage and disadvantage of both styles, and there's no best way. You just need to, it's all about you going figuring out what is most important to you in the sense of what you're most comfortable with. Now, some people are very comfortable with lots of risk, some people are not. Okay, so now if we use the instant break, right? So let's say this big bearish candle, that's where the trend line here was broken. If we use this, let's say break and retest, you see the next candle reached up and then pulled back down. So that's a clear break and retest. And we use this as a reason to sell, okay? So we do something like this, and we get involved in a sell position after the break and retest, so which will be at the close of this candle. And maybe we put our stop loss at this, just above there, and then we put our take profits down to this low, because based on our expectation, we understand that the overall direction of the market is for price to continue to go down. Okay. Now, the advantage of this one is, well, if you're right, you get in early and the market moves your way, that's fine. However, the disadvantage is, yeah, sure, price could break down and then continue to break back up and continue to move. So the break alone is nice, but what you want to see, or what you might want to see, is a follow-up of the break. Now, so you ask yourself, right? You ask yourself, where is this move coming from? This is the low, right? This is the high. This is the low. This is the high. This is the low to the high, and then the low here to a high, and the low to a high. So good, it's okay that I see a break of the trend line, But just simply looking at this, one thing I probably also want to see is for price to now break this previous low here. So what this will mean is that price is no longer making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, but it has now made a what? A lower low. So this is a break of structure from being bullish to now shifting back bearish with the overall market direction. And it happens just after we see this counter trend line break. Okay, so now we have our counter trend line break, we have our break of structure confirming the overall direction of the market, and now we can begin to look for what? For selling opportunities to take this lower. Okay, so now this is where, you know, what we just did now with this is just to identify a reason to now begin to sell in the direction of the overall market. Remember, the overall market is bearish. We want to sell, but the market is just shifting bullish on a smaller time frame, and we're looking or waiting for a reason to sell. Now, for someone who is waiting for the break of structure, which would come just after we get the break of this low, at this point, what you can now begin to do is what? Look for confirmation or retest, either a retest of the trend line or a retest of previous highs, and then begin to use that as reason to get involved. So you notice what happened here is that, well, see what price did. Price made a, you know, it came from this high and it broke down to this low. Okay, so we have a break, pullback, break, and a pullback to retest previous areas, and then what you'll see is that the market begins to fall. Okay, so let's just quickly look at that. So you see what happened there, and then price begins to drop. And where do you think price drops towards? Down here, came back to take out the slow. Still the same idea, right? So now the reason we're able to not be selling, the reason we did not so look at this, right? For some, let's imagine someone else who is also anticipating price to go down. They begin to see this pullback. They say, yes, price wants to now begin to go back, and they sell, and the price goes up. And then, oh, they see price pulling back down, and they sell, and the price goes up. Same thing, price pulls back, they start selling, price takes them out. If they start selling, price takes them out. And then we have the break, and then this is when price begins to move. Okay, so even, you know, this helps us to stay away from, you know, it's making profit in the market is not just about taking trades and being profitable. It's also about staying away from when the market does not make any sense, so that you don't give back the profits that you've made. I don't know if that makes sense to you. Okay, so we stayed away from this market because we're waiting for confirmation to sell, not just selling at random areas. Okay, so let's go back to the daily time frame. We're able to capture a trade here. Either you get involved in this trade here like so, or you get involved in, you know, the retest, something like this. Okay, for those of you who joined one of my previous classes with regards to Y curve, you'd understand that there was clear Y curve distribution schematics just here, which you'd have been able to use as a selling condition, to, you know, selling criteria to be a seller in the market. And, you know, one beautiful thing about this is, the good thing about this is that you don't necessarily need to catch the move when it happens. You know, you're not going to always be on the chart. But once you've seen that the market has begun to shift in the direction you want to see, that means every area here, you know, once the confirmation is clear that the market is now ready to move, you can now begin to aggressively look for selling opportunities because you've seen the confirmation that you were looking for. You know, sure, you did not get involved in the trade here, but the market has confirmed that the sellers have now taken control. You can start to look for opportunities to sell. Now, this is even, you know, it gets even more intriguing, or you can break this down even further. Now, this is the 1 hour chart. Okay, so this, what we're looking at here is the 1 hour chart. We have seen that we're confirmed to go bearish on the daily. We're confirmed to go bearish on the 1 hour. What do you think this area here would look like on the 5 minutes chart? Well, it will look like this: bullish markets. You know, the 15-minute chart, the 5-minute chart look very bullish like this. And you can go and look for the counter trend line trades there and look to short that, you know, once you get the confirmation. And definitely, I bet you will probably, I know that if I go back to the 5 minutes, it will not probably get back to this region. But there will be some sort of counter trend line move here that gets broken when, you know, with this break here, which you'd have been able to sell. Okay, let's see if I can go back that far. Let me do the 15 minutes. Let's see if we'll be able to get back this far. I doubt it. Yeah, so that's we can't go back there. Let me use 30 minutes, because the 30 minutes might not show a clear move. Okay, the 30 minutes look very similar to the 1 hour. So you probably see the move here on the 5 minutes or the 15 minutes. You'd see the market. You most likely, this would be a move on its own that would have formed its own counter trend line that could serve as, another confirmation. So we have the overall confirmation here, and we're still looking, so the reason I'm explaining this is some people will feel, oh, I missed the trades and that's it. The market does not move in a straight line. As long as the conditions are right, as long as the confirmation is still clear and it has not been negated, whether you're a seller here, whether you started selling here, or you started selling here, or you even started selling here, or you started selling here, there are lots of opportunities in the market for you, because you notice what the market kept doing, just kept going down. Okay, so let's take another example of this same on this same pair. So let's go back up to our daily time frame again once more. Okay. And mind you, I didn't look at this pair to try and spot the move or anything of the sort. So this is our low to our high, and that was where we found the trade. And then what did price do here again? This is the high, it made a new low. And what the price began to do, it started to push up. So what we can do now is to zoom into, we can just copy and use this again. We can zoom into this area here and look for the move and see if we can spot a counter trend there. So let's go to the 1 hour chart again and go back to where we were, right? And that's it. So this is the low that price made. So price came from obviously this low here, and this is the high. So at this point where price began to shift back bullish, even though we know the overall direction is bearish, you can see that sure there were moves. Now somebody can say, oh, look at the counter trend break, and yes, you're not going. It's not a fail safe. That means it's always 100% good. There's nothing that's 100% going to work, right? But understanding this will give you an edge. Okay, so even if you traded this, sure, you probably might have even been able to make some trade if you partial out and take profit. But you can see this another trend forming. Okay, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then breaks and then begin to fall. Okay, so let's look at this clearly. So let's just zoom in here, and let me pick up my trend line too, and let's just spot our trend line. Again, similar type scenario. Okay, so the market is beginning to move counter the overall direction. What are we doing? We're not doing anything. We're not selling. We're not doing anything. We're not buying. We're waiting for opportunity to sell. Okay, so price makes this big bullish move, right? A lot of people get involved trying to buy. They start looking to buy the markets. Well, maybe they make some profit because price gets here, but then price begins to sell off, and then people are like, oh yes, the market wants to now begin to sell. Doesn't break any trend. Holds the trend line. Holds the trend line. Holds the trend line. Makes this big bullish move, and a lot of people get involved buying. And what the market do? Well, it breaks down and now begins to confirm with the overall direction. So this is that break. So basically, this is where we have the test, we have the break, price pullback, came to retest it, and now it's looking to break back down. Okay. So, but what we're looking at is this counter trend line break here is the first sign that we're looking for to want to begin to be a seller in the market. Doesn't mean you make profits, but that's the first sign that we're looking for to be interested, to begin to be a seller or want to be a seller in the market. And then we have that break here. And what do you notice? Now remember, just look at this. Price was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, just making higher highs. And then when it broke, what the price began to do? Started to make lower lows, lower highs, lower lows, lower highs, lower lows. So yes, you don't necessarily need to, you don't need to get the move here. You don't need to catch the break there. You don't need to get the exact retest, but this has given you confirmation that chances are price wants to go down to the low, to the previous, just the low that it has just formed. And so that's what basically your trading idea should be with regards to this pair. So at the moment this happened, where do you think my overall target would be? I'll be looking for price to come back down to this low. Okay, so everything within here, I'll be looking for selling opportunities to take me down here. Okay, and still the same concept over and over and over again until, now this is obviously nothing lasts forever, until it gets to the point where, so let me go back to the daily time frame here, right? When the trend is no longer that clear, right? And how do we know that a trend is no longer clear? Now you can see that this trend is clearly bearish. It's making highs to low, to lower high, to lower low, to lower. It's just making lower highs and lower lows and lower highs and lower lows, at least on this higher time frame. You can see that it's on the higher time frame, it's very, 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 very clear. Like you can see it's clear. It's just making lower lows and lower highs, right? So this is why we pay attention to the higher time frame, because it controls basically the overall direction of the market. Okay, now sure, when the market is tired of going down, what you see is it will fail to hold this high. So in a situation where this market now breaks up like this, okay, takes out this high, at this point, when I see price breaking down, do you think I'll be looking for selling opportunities? Well, the answer is no. Sure, there will be a trend line here that probably will get broken, and maybe price might go down, but chances are price now wants to begin to shift up like this. Okay, so which is why understanding where you are in the market and what direction the structure, the higher time frame is putting in, would help you to probably, one, figure out the direction you want to trade towards, or two, stay away from the market if you don't see a clean structure. But based on this current on the market structure that we are seeing so far, making lower lows and lower highs and lower lows and lower highs and lower lows, what do you think I'm anticipating? Well, I'm anticipating price to come back down here. So let's see what we can, what would I be anticipating in this particular light? So this is a live price movement. Okay, let's apply the same concepts that we're learning. We'll go down to the 1 hour time frame. And what are we looking for? Well, let's try and see if we can spot the trend line. Okay, now obviously, if we just connect this like so, this would be a trend line to keep in mind. Okay, so that there will be a trend line to keep in mind. Also, there's also this. Okay, so this get broken, but price is still making higher highs and higher lows. And well, so far in this particular one here, I think this trend line here is the one I'll keep in mind. This particular one that I just drew here now is the one I'll probably want to watch for. So that means as long as price does not close above this high, as long as price we don't see a daily candle close, right, above this high, I call it protected high. As long as we don't see a daily candle close above this high, my anticipation is that price is going to come back down here. So this here would be my liquidity targets, okay? Right? So basically what I'll be sitting watching for is, if price breaks above this high, if we have a daily candle close above this high, then I'll just stay back from this market and probably try and watch something else or wait for context to come back in. But because the overall direction is bearish, I'm okay looking for selling opportunity. But I want to see that selling opportunity when we have a break of this trend line. Now, you can see that this is a terminal pattern. So by terminal pattern, I mean it has to come to an end at some point. Price is either A, going to close above here, or B, going to close below the trend line. Okay, and so either price continues to do this and breaks, or price does this and breaks. Okay, so right here, right now, I'll just be watching and waiting to see price close below this trend line. Okay, and then let me zoom in a little bit. I want to see price maybe close below this trend line. It can come here, go back up, maybe break here. Okay, and then I want to see maybe a retest or a break of structure of previous structure. Okay, and that would serve as confirmation to do what? To sell the market down to this liquidity target here. I don't know if you guys are following. I hope this makes, I hope the concept so far is making sense, okay? Just type in your responses in the chat box while I just, this concept applies everywhere. Let me just go and try and see if I can find and just pick any other pair and see if we can spot the same thing. So I'm just going to just quickly do the same thing here. Daily time frame, try and identify the overall direction. This one is bullish, at least from this region here. It was bearish, now it was bullish. Okay. So same thing, same concept goes here. So price is making higher highs, higher lows, higher highs, higher lows. Okay, this is a lower low nonetheless. Higher highs, higher lows. So even this intermediary move here, I'm showing you higher highs and higher lows. And these pullbacks, this counter trend move here would offer the opportunity to basically look for those kind of scenarios where you've identified the trend and then you're looking for a way to capitalize on the move when the trend is ready to continue in the right direction. Let me look for something cleaner. Let's use EU. Let's use EU daily time frame. So yeah, similar type thing here. So just look at this, right? Look at this. Clearly, the market has been very, 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 very bearish last year. All through last year, EU was very bearish. Those of you who are in my class would know that we made it. Basically, we were only interested in selling this market, and we kept selling it until price had this break here. And since then, I've been a buyer in this market until a few months ago. Okay, now let's just take this area for instance. The price is making lower lows, lower highs, right? Well, we know that we're bearish now. Lower low, lower high, lower low. It pulls back, makes a lower high. Okay, so already, if you go down to the 1 hour time frame of this area here, what do you think you'd see? You probably see something like this. Okay, and then if you spot the trend line, you'd see that break of that area there, and then you can use that as a reason to begin to sell. Same thing again, price made a low, and what did you see? Price began to make, pull back up. Okay, if you can see the trend line here, it gets broken and price falls. Same thing, price comes to a low, begins to pull back. Where did that pullback come from? From this low. If you look at this move on the 1 hour, 4 hour charts to look like this. Spots the counter trend line, it breaks, and then you use that as confirmation to begin to sell. Same thing, and it keeps happening until the market breaks this structure. So it's by breaking the structure, it means I'm probably not interested in respecting the sellers anymore. And then when he broke it once and broke it again, it means, well, it seems buyers have stepped in to take control of this market. And then, so instead of waiting for counter trend on the sell side, I'm now looking for counter trends on the buy side. So price came from this low to this high, to this low, to basically this high, to this low here, to this high. So again, same thing, low to high, and you can see all the counter trend move. Now, these ones are not as much because this is a counter trend move. If you go on the 1 hour time frame, you will see something like this, and with a trend line that is clear to be broken. If you go onto somewhere like here too, you still see the same thing, counter trend line, counter trend move. Same thing here, same thing here. Now look at this one. I think we can, let's go into this one. This is one trade that I took. Some of you, those of you who are in the Telegram channel or who join my live classes, you'll be able to then remember when we took this trade from down here. So we took this trade from down here and we were able to capture the move all the way up here. Okay. And now it wasn't necessarily based on the counter trend line, but the same concept will apply. So let's highlight these areas and let's see what that looks like. So let's just draw this move like so. Go over to the 1 hour charts and just try and find that area. Okay, so this here is the area here. And then if you look at this here, so the market was bullish, and then all of a sudden price began to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So basically that's the move. And then, you know, if you try and spot the trend line here, probably look something like this. Let's see, there are probably multiple trend lines. It's probably one here. Yeah, this is probably the cleanest. Okay, and that is clean. This is not necessarily clean. Now the trend lines in this particular one are not that clean, but you can still see it. So this trend line here, look at this. The market stayed below the trend line. We broke above it. What did we do? We came back, we tested it, and began to move. Now, sure, in this particular case, it came down slightly below it again, but still, you get the whole idea. The same concept applies here. You can even fractalize this further, where this move here on the lower time frame would look like this. Okay, and then if you spot the break of the trend line, which would happen somewhere, you know, within that structure, like so, you have that break here. And what did you see price began to do? It began to push up, right? And continue to stay up. Okay, so the concept is clean. The concept itself is, it's based on market structure. It's not based on guessing, or you see a big bearish candle and you begin to buy aggressively, or you see a big bullish candle and you begin, you know, stuff like that. Same thing here. Look at this, right? This is the high. So price went from that low to this high, okay? And then what do you see here? Just look at this. Look at this. Clear trend line. Markets now shifted back bearish, but this is counter the overall trend. Is it not it? And stayed below it, right? And what do you see? When we had the break of the trend line, as you can see there, we had the break of the trend line. Like so. We had the break of the trend line like so. Price came back, we tested, and what did you see? Began to move to the upside. Okay, so yeah, it's a very, you know, simple. It's a very simple but very quite powerful trading system or entry criteria that you can use. Remember, success in trading is not necessarily, it's not usually about having a complex strategy. Complex strategies are just going to, you know, you probably feel like you're doing a lot, but you're just, you know, you're just playing with fire. Okay, and you just find yourself losing here and there because of no context. Okay, and but simple, we wait for context to come in. Same thing here, right? But this one failed, right? And you know, we're waiting for this trend line to break. The trend line did not break at all. It didn't break. And what the price do? Price closed below a protected low. So if the market wants to continue to go bullish, it needed to stay above this low. But what did you see here? We broke below it. And so this is why I'm not as aggressively looking for buying opportunity on EU, even though we are beginning to break back bullish again. But I'm not aggressively looking for opportunities to buy as I was in the past. Now, obviously, anyway, this would be for a different class or some of my weekly market outlook. Price is beginning to shift back bullish, but I just need further confirmation. I want to see price close back on the daily time frame above this high. If we see that, then probably begin to look for that buying move. And then the same concept can still apply going forward. Okay, so that's the much that our time would permit today. I hope you guys enjoyed the class. I hope you're able to grab 18 or 2. So just let me know if you have some questions, and I'll see if I can take them. But meanwhile, just let me know if you enjoyed the class. Just type in a yes. Use the comment section below. Just type in a yes. Let me know if you enjoyed the class, what you're enjoying specifically. And then remember, if you don't have an account, just if you like I showed you earlier, you can take advantage of lots of classes from me, right? Anzo Capital. You can learn how to build forex robots. Okay. You can, if you're new to trading, you can take advantage of our beginner course. If you're already a trader, you're struggling, you want to get better, you can take advantage of some of our advanced classes, you know, and learn how to build profitable trading plan, understand Wyckoff methodology, other blocks, you know, and then take it to the next level by learning how to build forex robots. Okay. Okay, so yeah, okay, so everybody seems to enjoy the class. I'm getting yes, fire. Okay, good. How do you rewatch the recording? So the recording of the class would only be made available to clients who are basically trading with Anzo Capital. All the classes, you can get access to all the classes. Someone was asking how to get access to the robots class and all. You can get access to all the classes. You know, you're gonna get access to the courses once you have a funded account with Anzo. So just feel free to, if you have an account with Anzo Capital, probably reach out to your account manager, once you funded your account, and let them know the classes you want to participate in. They would reach out, they would get you into those classes. And if you don't have an account, you've not set up an account and you want to be able to take advantage of all the contents that we produce, feel free to just reach out to me. So I asked if some of us here, if we have classes, if we have accounts with Anzo Capital. I think a good number of you said yes. Some of the others said no. So if you don't and you'd like to set up an account, just let me know. If you would like to set up an account and you don't really have one with Anzo, let me know so that I can know how to go about helping you. Okay. So it's nice having everybody here. It's a pleasure having you guys here today. And yeah, so besides any other question, that would be where we call it a day. It was a pleasure talking to everyone.